You're scrolling through investing content and you keep seeing three letters everywhere: ETF. People talk about SPY, QQQ, VOO. Your investing app is full of them. But what actually is an ETF? If you're confused, you're not alone. These three letters are everywhere in modern investing. Today, I'm breaking down exactly what ETFs are, how they work, and why they've become one of the most popular investment tools in the world. By the end of this video, you'll understand them completely. Let's dive in. Quick disclaimer. Everything I share is educational based on my 10+ years of investing experience in both stocks and crypto. I'm not a licensed financial advisor, and this is not financial advice. Everyone's situation is different, so always do your own research and consult with qualified professionals before making any investment decisions. Now, let's break down ETFs. Let's start by breaking down what ETF actually stands for. E is for exchange, T is for traded, F is for fund. Exchange Traded Fund. Now let me explain what each of those words means in plain English, because once you understand these three words, ETFs make total sense. A fund is a collection of investments bundled together. Think of it like a basket holding multiple stocks or other assets. Traded means you can buy and sell it easily, just like you would buy or sell a single stock. And exchange means it trades on a stock exchange, like the New York Stock Exchange or NASDAQ. Put it all together, an ETF is a basket of investments that you can buy and sell on the stock market, just like a regular stock. That's it. That's an ETF. Here's how ETFs actually work. Imagine someone creates a fund and fills it with shares of different companies. Let's say they put Apple, Microsoft, Google, Tesla, and dozens of other companies into this fund. Then they package that entire collection into shares that you can buy. When you buy one share of the ETF, you're buying a tiny piece of everything inside that fund. You don't have to buy each company separately. You don't have to manage anything. One purchase, instant exposure to all those companies. This is what makes ETFs so powerful. Let's say you want to own the 500 biggest companies in America. Without an ETF, you'd need to buy 500 different stocks. That's 500 separate purchases, 500 positions to track, 500 decisions to make. But with an ETF like SPY, which tracks the S&P 500, you click Buy once and you instantly own pieces of all 500 companies. One click, 500 companies. That's the beauty of ETFs. They make diversification incredibly simple and accessible. So why have ETFs become so incredibly popular? There are 5 big reasons. 1, they're easy to buy and sell. You can trade them throughout the day, just like stocks. 2, instant diversification. One purchase gives you exposure to dozens, hundreds, or even thousands of different investments. 3, low fees. Most ETFs charge very low fees, often under 0.1% per year. 4, they trade during market hours, so you can react quickly if you need to. And 5, they're transparent. You can look up exactly what's inside any ETF anytime you want. No surprises, no hidden holdings. ETFs have absolutely exploded in popularity. In the 1990s, there were only a handful. Today, there are thousands of different ETFs with over $7 trillion invested in them globally. They've revolutionized how regular people invest because they made diversification simple and affordable. You don't need to be rich, you don't need to be an expert. You can start with a few $100s and get instant exposure to the entire market. That's powerful. Here's where ETFs get really interesting. There are thousands of different types. Broad market ETFs that track the entire U.S. stock market, like SPY or VOO. Sector ETFs that focus on one industry, like technology or healthcare. International ETFs that invest in companies outside the U.S. Bond ETFs that hold government or corporate bonds instead of stocks. Commodity ETFs that track things like gold or oil. And thematic ETFs that focus on specific trends like artificial intelligence or clean energy. Whatever you want to invest in, there's probably an ETF for it. Let me show you 3 of the most popular ETFs in the world. SPY, which stands for S&P 500 ETF, it's one of the largest and most traded ETFs with over $500 billion in assets. It tracks the 500 biggest U.S. companies. QQQ, which tracks the NASDAQ 100, focusing heavily on technology companies like Apple, Microsoft, and Google. And VOO, Vanguard's version of the S&P 500, known for having extremely low fees at just 0.03%. These three alone account for hundreds of billions in trading volume every single day. If you're just starting out and someone mentions ETFs, they're probably talking about these ones. So how do you actually start investing in ETFs? It's simpler than you think. Step 1, open a brokerage account with a trusted platform like Fidelity, Vanguard, or Schwab. Most let you start with no minimum investment. Step 2, research which ETF fits your goals. Look at what holdings are inside, check the fees, and read about what it tracks. Step 3, start small. You can buy ETFs for as little as the price of one share, which for many popular ETFs is a few $100s or less. And step 4, buy and hold. ETFs work best as long-term investments. Don't try to day trade them. Just buy, hold, and let time and compound interest do the heavy lifting. A few quick do's and don'ts. Do start with broad market ETFs that track major indexes. Do check the expense ratio and keep it low. Do make sure you understand what's actually inside the ETF before you buy. Do think long-term, at least 10 years or more. And do diversify across a few different ETFs. Don't chase hot trends without understanding them. Don't ignore fees because they compound over time and eat your returns. Don't buy something you don't fully understand. Don't try to day trade ETFs. That's not what they're designed for. And don't put all your money into one ETF. Even with ETFs, some diversification is smart. All right, let's wrap this up. ETF stands for Exchange Traded Fund. It's a collection of investments like stocks, bonds, or commodities bundled together that you can buy and sell on the stock market just like a regular stock. One purchase gives you instant diversification across dozens or hundreds of different holdings. They charge low fees, they're transparent about what's inside, and they're incredibly easy to access through any brokerage account. ETFs have revolutionized investing by making diversification simple, affordable, and accessible to everyone. Whether you're just starting out or you've been investing for years, ETFs are a powerful tool. If this video helped you finally understand what ETFs are, please hit that subscribe button and turn on notifications. Every week on the Investing Whiteboard, I break down investing concepts this simply, using real experience from over a decade in the markets. Drop a comment below and tell me, do you already own any ETFs? Which ones? Or if you're new, what type of ETF interests you most? I read every single comment. Thanks for watching, and remember, investing doesn't have to be complicated. See you in the next one.